Let's have a look at Adobe now before I go any further about the markets in general. Adobe has had a bit of a torrid time in the last 2 years, as you can see here on the chart. Target wise, if the trend continues, you're looking at possible 200 from here. Any bounce could easily see it back up to the 300 area. So these are the two areas I've looked at for year end. We'll look at the downside. The market is kind of the trend is your friend. There's a couple of double your money trades. I think this one's not too bad. The 170, 180, 200 put fly, only because it's cheap. So I know what my downside is. It does have a small delta, so it will increase in value as we go down. So you could see it kind of like, you're going to make 30 or 40 cents even on a knee-jerk reaction. You need time to go by before you really see that fruition. Got a kind of bottom right corner there. But basically it's saying, this is what the market believes in. It doesn't quite believe in the chance of a rally. But we like playing contrarian. Oh, no, wrong one. Sorry, we'll go back and click on the 300. Now, rally-wise, there's actually a couple of really good trades to do. Actually, some insanely good trades. I actually like not the top one that we picked. I'm going to go for the second one. Now, I get why our system chose it, and I will probably be proved wrong and the system right over the course of the time. I just like the lower strike. It just gives me a bit better chance. Although the premium you're paying for this is a lot more. I'm looking to pay just over $2 to get out at 17 and a half, $17.75, as opposed to paying 71 cents to be able to exit around $6.87. Because it's cheaper, you can put on more, and so the system likes that as an ROI. I don't know. I should go with the system. Every time I do this, I'm proved wrong, and the system is better. But whatever. It's a lower strike, so it has more of a chance of getting in the money. And yeah, even on a knee-jerk reaction, that one's going to increase in value by 60 cents to $1. And also, these upside flies are really cheap, relatively speaking, just because this trend has been consistent and been on for so long. It clearly, even though we're trading 240, so it's kind of midpoint I'm looking at, there's a lot more trades to do for a bounce on the upside than there is on the downside. This one here is in its third percentile, which means an equidistant fly, distance from the out of money, that this is in its third percentile, sorry. And so I kind of like that one. And just as a punt, let's have a look at this one as well. What the hell? One's in its sixth percentile, also very low. I see the point. This one you could make like 20 to 30 cents on as opposed to 50 cents, but you're paying out a lot less for the privilege. So, this one system likes. So pick either one of these if that's your, if you kind of like Adobe and want an upside trade. Either two of these flies are the best to do.